The stock market has rebounded quite a bit since its lows back in March, and as a result, many stocks are no longer cheap or at attractive valuations for me personally. The premium stocks, the best of breed stocks, are mostly trading at fair or even overvalued prices as of recording this video. That being said though, there are some decent quality companies on sale. These may not be the industry leaders of their respective segments, but they are well-run companies with good balance sheets. So in today's video, I'm personally looking at these three stocks for May 2020 where I still see a ton of value in, and I want to share my reasons as to why I see value and where I think these stocks are going to go over the medium to long term. And guys, this is our monthly series, the most popular series on this channel, so smash a like down below. Let's get 1,000 likes on this video and set channel records. And if you're brand new to the channel, hit that subscribe button down below. If you want to support the channel, you can hit that join button right beside it. But either way guys, let's get into the video. So here's a stock that isn't talked about much in the YouTube space, but once you learn more about the history of this company, you will be impressed and interested. LEGGETT PLATT is an industrial company that is what I call a behind-the-scenes company, because all the products that they create are used in common everyday items, but they aren't something that you would interact with directly. You would never really know about this company unless you explicitly looked into the company and found out what kind of products they create. Now they have three main segments to their business which they create parts for: bedding products, furniture, flooring, and textile products, and specialized products. And more specifically here, you can get an idea of the vast range of products they produce for each of their segments, from springs to fabrics to foams. LEGGETT PLATT does it all, and many products you may own at home could have their parts in it. Now the company doesn't really sell directly to consumers, so their consumer base is larger companies you probably know of. Companies in the mattress space, home improvement centers, and manufacturers of furniture or automotive parts like car seats. LEGGETT PLATT is also a very global company as they operate and have manufacturing plants in Asia, Europe, Africa, and North and South America, so you get good diversity worldwide here as well. US is of course the largest by far since it is a US company, so in my opinion you get a good balance here for global diversification with a good home base. Now the stock has tumbled well over 50% at its lows, but it currently sits at just over 40% down from its highs that it was at just a few months ago. Now I personally was interested in the stock when it was in the high 30s and in the low 40s, and when it dropped to the low 20s, it was an absolute steal. If you're part of my VIP group, link description down below, you would know exactly when I actually bought into the stock, and we are currently up on this position right now. Now if you're wondering why the stock dropped so drastically, here's a breakdown of their revenue segments, and you can see they have exposure to many industries. However, a couple of these industries are directly impacted by the global issue, like aerospace and automotive. These two segments make up 20% of their revenue, so it is quite an impact to the business if production and sales stopped here. However, what I like is that they have a ton of exposure to bedding, fabrics, and furniture, and in my opinion, these segments aren't going to hurt too bad. We already know companies like Wayfair have said that their sales are spiking as people work from home now, so we know consumers are still shopping for home products. And with people working from home and being home all day, they will most likely value quality furniture a bit more comfortable furniture, things that they actually use on a day-to-day basis. And this is why I believe LEGGETT PLATT should be fine through this global issue. So yes, while I do believe that this company will be affected here in 2020, revenue and profits will be down year over year, almost guaranteed here. I believe looking out a few years, this company will bounce back very strong. The company is also in a decent position here financially, with their short-term assets able to cover their short-term liabilities and debt. So I'm personally not too concerned. However, they do have a lot of inventory which could become a liability if they aren't able to sell it. So that's something as an investor that you need to keep an eye on. But apart from this, LEGGETT PLATT is a very healthy business that generally has good revenue growth, good net income growth, and decent margins as well. Now, while 2020 estimates show that the company will see a decline this year, there is optimism that things will recover in 2021. Another extremely appealing aspect of LEGGETT PLATT is their dividend history. Currently, the stock yields 5.35%, growing the dividend by 5.31% on average for the last 47 years. That's right guys, LEGGETT PLATT is almost a dividend king, and it's probably a company you've never heard of before. Now you may notice the payout ratio here is a bit high. However, I feel that this is a short-term issue and the company should be able to sustain this dividend moving forward. We may get more information on that on their earnings, which is scheduled to come up very soon. Now finally, looking at the charts here, you can see after a recent sell-off, investors have realized that, in my opinion, the stock has sold off a bit too much and we've seen some sort of recovery here now in the last few weeks. I personally think that in the short to medium term we'll stabilize around the $40 mark again in this stock, but over the next 5 years I believe this will be a stock that is once again trading well over their previous highs of over $55 per share. So Leggett & Platt is a smaller company here. It's a smaller market cap company, so I wouldn't have a huge portion of my portfolio personally in Leggett & Platt. However, this company has proven the test of time. It's been around for a very long time, and as you saw, it's almost a dividend king as well. So pretty much looking at this company, all the different metrics of it, it seems like a pretty good buy right now for a long-term hold. Our second stock here, Wells Fargo, is a financial giant that really needs no introduction. They are one of the largest banks in the US and in the world, and they have been affected by the recent sell-off along with all other banks. With interest rates dropping, banks make less money. However, I feel that the sell-off here is very overdone, and over time, Wells Fargo, along with the other banks, should see a nice recovery. Wells Fargo is still trading near its lows here, down over 48% currently, and over 50% when it was at its peak low recently. The company has gone through many fundamental issues in the last few years, like the scandal that everyone knows of. So quite honestly, this company has been a big laggard in the financial space. However, looking forward, I believe this company is going to come out just fine, and investors will realize this soon enough, especially at these oversold levels. Now, when looking at their cash versus liabilities, it may look concerning at first. However, since it's a bank, they have a ton of assets that are not straight cash. And when we look at their total assets, it comes in well over their total liabilities. So the company is in a sound financial position right now, and there's no concerns, in my opinion, of a bankruptcy in Wells Fargo. Now, in the great financial crisis, this company was actually one of the best positioned banks and came out just fine compared to its peers. And this time around, the company is once again positioned to come out just fine, so this should put your mind at ease if you hold Wells Fargo stock. Now, when looking at their future income, things get a bit gloomy, which is reflected in the stock prices. Revenues are expected to drop by over 30% in the short term, and net income is expected to nosedive as well. However, looking out a few years, while revenues are expected to be relatively low still, net income is expected to pick back up, and I believe within 5 years or so we should be near levels where we were at in 2019, unless we see another crisis between now and then. Now, in terms of dividends, Wells Fargo pays a whopping 7.48% starting yield, and although its growth history is only 9 years, they did grow the dividend quite nicely over this time. Now again, their payout is very high here because, like we saw, income will take a big hit, but looking out a few years as things stabilize, we should still get a good dividend from this bank. They may end up reducing the dividend here in the short term if they find that they have liquidity issues, but they have just reported earnings recently and didn't really announce any cuts, so I wouldn't be too concerned here with the dividend if things in the overall market do start to recover from now on. Looking at the charts here, we can see that drastic drop that Wells Fargo saw in the last month after moving in a range of around $45 to $55 for the last little while. Even coming into the sell-off, the company was very oversold in my opinion and showed a ton of value, and at current prices, I believe we are seeing a deep discount in this stock. Over time, I think that Wells Fargo gets back to its $40 to $50 level, which would be more fair value now based on its future earning estimates. And if things really did get better and we go back to how things were in 2019, we could eventually get the stock back to its previous highs above $60 per share. But that's being very optimistic right now because a lot has turned positive for this company to actually have that happen in the next 5 years. I like Wells Fargo because it's a very large financial institution. It gives you exposure to the financial space, gives you a nice juicy dividend, and it gives you stability. Combine all of this with the fact that I believe it's trading at cheap valuations right now and has a good amount of upside to it, makes it a very good candidate for my May 2020 stocks to buy video. Our final stock here is another financial related company, but they play in a different kind of space. While they do offer loans as well, American Express also operates credit cards, which is an interesting space to look at right now. I've previously covered Discover Financial on my channel, which I think is a very cheap stock at these levels, and American Express is kind of like the big brother of this company. It's larger, it's more premium, and it's a stronger business financially, so I wanted to cover it in this video as well. Right now we're sitting near 40% off the highs, and at the lows the stock was down over 50% from its highs. American Express is a strong business and brand, and to see a sell-off this drastic should gain your attention to at least look into the business a bit more. After I spent some time looking into this company, there was a lot to like about this business. However, that being said, American Express is affected by the global issue directly because consumer spending is down and travel is down, which are big components of this business. And this isn't just a local issue, this is a global issue that's happening right now. So American Express is getting hurt pretty much from all over the world, and this is why their stock price has taken a hard hit recently. Financially, this company is in a good position here with a ton of assets compared to its liabilities, so I'm not worried again about any sort of bankruptcy with American Express. Looking at their revenues and net income growth, this company has done very well coming into 2020. However, in 2020, it will take a hit, but recovery is expected to come back fairly soon for this business. If things go according to plan, we should see their financials normalize by 2022, meaning that the stock should recover most of, if not all of its losses in just a few years. This is of course considering we get back to those growth numbers, but I think it's very likely if the economy bounces back strongly. Now, American Express is also a good dividend company like LEGGETT and PLATT and Wells Fargo, and it currently yields a respectable 2.07% starting yield. It has 8 years of growth, and it also has a whopping 10% growth rate for its dividend year over year. But unlike the other two companies, American Express is in a very sound position to maintain this dividend and even grow this dividend here. And that's because its current payout ratio is sitting under 50%. This is a very healthy number, and it's something that I typically look for strength in a business that pays out dividends. The company also recently announced their earnings, and there was no cuts or suspensions to their dividends. So in my opinion, this is relatively safe for now. Now finally, if we look at the charts here for American Express, we see a sharp sell-off in the stock, and again, based on the fundamentals we saw, this sort of makes sense because the company is going to hurt here in the short term. But like I said, I believe this company will be able to bounce back in a few years, resulting in the stock also most likely bouncing back even sooner. So at current levels, it looks like a very strong blue chip company to add to a portfolio that's lacking any financial exposure. Now, I'm not going to lie here, my favorite stock when it comes to the payment space is Visa, bar none. But I do believe that at current valuations, Visa is expensive, and American Express is offering a lot of discount here because it has that added risk of the loans business. And if you do understand how that segment of their business works, American Express may actually be a very tempting buy right now. So now what I want you guys to do is actually rate the three companies that I had here. We talked about LEGGETT and PLATT, we talked about Wells Fargo, and we talked about American Express. Let me know in the comment section down below which one you would have as your number 1, number 2, number 3. I'd love to hear your thoughts, guys. I'm going to read every single comment on this video, so make sure to comment it down below. And don't forget to drop a like if you enjoyed this, because we're going for 1,000 likes on this video. Thank you so much for watching. Hope you enjoyed the video. Don't forget to invest positively, and I'll see you in the next one. Peace.